One question for you. Have you been profitable over the past 30 days? If you answered no, let me show you a wildly effective chart pattern that would have made you profitable. And before the keyboard warriors go at it in the comment section, this chart pattern has not only been profitable over the past 30 days, it's a chart pattern that I've used to pull profits out of the market for over 8 years. It's the same chart pattern I used to get in the trade you currently see on your screen. And when combined with the right technical factors into a strategy, it is a chart pattern that can provide an insane edge over the market. So in today's video, you're going to learn the #1 mistake keeping you from being profitable and the chart pattern trading strategy that can fix that issue. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. Welcome back, and I want to dive right into this chart pattern. So we're going to talk about the #1 mistake keeping you from being profitable a little later in the video. But for now, let's get started with the chart pattern that would have made you profitable over the last 30 days. The pattern I am referring to is double tops and double bottoms, but not traded in the way you've heard about before. In order to get the insane results that you can achieve with these patterns, you have to trade them in a very specific way and with very specific rules. And I'm going to tell you those rules a little later in the video, but for now, I want to make sure we cover the basics for anyone that is brand new, starting with what is a double top and what is a double bottom. We're actually going to start with double bottom. So on the screen, you can see price pushing down, and this is a double bottom. It's when we have price pushing down, creating a pullback, then retesting the lowest low that price made before the pullback, and then seeing price go higher. And the opposite is true for a double top. That's when we see price push up, then we see a pullback, then we see a retest of that previous highest high, followed by a rejection. That would be a double top. Now, how do we use these patterns in our trading? Again, we're gonna have really specific rules for them that actually cause them to be profitable. But let's go ahead and go through the easy version of how we use them now. So these patterns indicate possible reversals. If price is pushing lower and we see something like this double bottom here, that could be an indication that prices are heading higher. And the opposite is true as well. If we see price pushing higher and we see this double top form here, that can be an indication that prices are about to fall or reverse. Now I'm going to go over the very specific rules that cause these patterns to be profitable. And after I do that, I'm going to be sharing with you what would have happened if you would have traded this way for the past 30 days, 90 days, and for all of 2023. And after that, I'm going to be showing you 2 trades that I'm in live right now using exactly what you're learning in this video, so you can see that this isn't completely in hindsight. I actually took a lot of the trades I'm going to be sharing with you. And again, I have 2 open trades. They're live right now using this exact same chart pattern. So let's go ahead and dive into the rules. We're going to start off with a double bottom. This is the scenario I want to see first. For the rules for a double bottom, I want to see price pushing lower. I then want to see the beginning stage of a pullback or the start of a pullback. When I see the start of this pullback and then this pullback begin to fail, this is what that looks like. When that pullback begins to fail, we have our impulsive move down right here. We then have a pullback, and this, when price starts to push lower after the pullback, would be the pullback beginning to fail. When that happens, I'm going to go ahead and create a termination zone right back here. And this is what I mean by that. When this begins, when we have the push down, the pullback beginning to fail, at that point, I'm going to point out an area between the body and the low of this previous swing low. So the way that would look, I actually do it with a box tool. I grab a box tool, I start at the body of those candles. I go all the way down to the low that was created there, the lowest point of this first swing low, and this is what I call the termination zone. What this means is that in order to have a valid double bottom, I need price to come down and at least touch this zone. I can also have price push down and close inside of this zone. I can even see a wick go past this zone. All of that would be a valid double bottom. I would have everything I need to say I have a double bottom here if any of those situations happened. If price came all the way down and closed below my zone, at this point, this would not be a double bottom, because if we get a close below the lowest point of this previous swing low, that indicates that we are likely to see trend continuation to the downside. So the only scenarios where I can see a valid trade are a touch of the termination zone, a close in the termination zone. Even a wick going beyond the termination zone is fine, but a candle closing beyond the termination zone would invalidate this as a double bottom. Let's go ahead and see what price does so I can explain this further. As you can see, price plays around a bit, but eventually, do we get a touch of our termination zone? The answer is yes. Right here, price has now touched the termination zone. So these are my conditions for a double bottom. If price would have closed down here inside of this termination zone, would I have a valid double bottom? Yes, I would. If we had a wick that went past it, would this be a valid double bottom? Yes, it would. If this candle came all the way down and closed outside of the zone I created from the lowest wick to the lowest body of this first swing low, would that be valid? No, that's the only thing that would invalidate this as a double bottom. So now we have the objective rules that can keep us consistent, and these are the rules that I've found to be most profitable when it comes to spotting double bottoms, and we'll go over double tops in a second. But here's how we spot the pattern. We can't just trade based on spotting the pattern though. After we create the conditions for whatever pattern we're trading, we need a specific reason why we enter every time we see this setup occur. So at this point, we have our setup. I'm gonna go ahead and break down the entry, stops, and targets as well. If you're unfamiliar, this is an acronym I call CEST, and it's the acronym I use to create or trade any strategy that I ever create or trade. It stands for conditions, which are what we just discussed, the conditions of this double bottom, an entry reason, stops, and targets. I would highly recommend that you create an acronym for yourself or use this one anytime you're placing a trade. So at this point, we have the conditions met. For an entry, what I have seen to work best with this pattern and in this specific way of trading is placing an entry right at the high of what we call the neckline of this double bottom. This double bottom consists of a bottom, a neckline, which is the highest point of the pullback before the pushback lower. And at this point, the highest point of that neckline is where I enter the market. Now you have a couple of choices on this. You can either wait around and just watch price to see when it actually touches this zone. For me, I use what's called a buy stop order, which means I'm telling my broker I want to get involved in this trade when price or if price pushes high enough to hit my order. My buy stop order would be right here again at the top of this neckline. So this trade would look something like having a buy stop order right there at my blue line. For a stop loss, I'm going to go 1 pip below the lowest low of our double bottom, whether it's this low, the initial one, or if this low would have been lower, my stop loss would just go below that low. So it depends on which low is lowest, but that's where my stop loss is going to go. After that, I normally manage the position, but for the sake of this video being more simplistic, we're going to go with a 1.4 to 1 reward to risk ratio on all these trades. And so remember, we're not even going to be involved in this trade unless we hit this blue line. At this point, we have all the conditions met for a double bottom, but we don't have the entry criteria met yet, because the entry criteria after we see all of this other stuff occur is that we need price to push high enough to break this neckline, which is where my order would be sitting in this specific scenario. Let's go ahead and click play. As you can see, we've now been entered into the trade. Price then continues to climb and eventually climbs high enough to hit that 1.4 to 1 target. So a quick recap of a double bottom before we move on to double tops. We are going to wait for this first initial swing low to occur. We're going to wait for a pullback that then begins to fail by pushing back lower. We're going to create a termination zone between the body and the low of that initial low of the double bottom. Then we're going to wait and see if price eventually comes down and at least touches this area, can close inside of it, can wick past it, cannot close below it. As long as that occurs, we have a valid double bottom already, but we're not entering the trade just because of that valid double bottom criteria. Our entry criteria, or at least for me, the way I've traded this and seen it to be most profitable, is having that entry criteria be when price crosses above the neckline of our double bottom. That will be the entry. And for stops and targets, super simple. Stops just below the lowest point of the double bottom, targets at this point at a 1.4 to 1 reward to risk ratio. Now for a double top, we'll speed it up a bit here because it should be pretty easy to comprehend since you just learned about that double bottom, and this is literally just the opposite. We have price pushing higher. What we're waiting on is to see price push higher, create a pullback, and then that pullback begin to fail. In an uptrend, that would look like this. As soon as that pullback begins to fail and sellers are no longer in control, that's when we want to start looking for a possible double top. At the point that the pullback begins to fail, as in we start to get a little bit of a push higher, I'm going to create that same termination zone, except this time it's going to be between the bodies and the highest point of that initial swing high that we started with before the pullback and failure to continue pushing lower. At this point, what do you think we're looking for? Well, the opposite is true as to what we had with the double bottom. We want to see price at least touch our termination zone. We can see price come up here and close inside of our termination zone. We can even see a wick go past the termination zone. What we do not want to see is price come up here and close all the way above that termination zone. That would be an invalid double top, because if we get a close above this high, then chances are we're looking at trend continuation, not a double top and possible reversal. So in that case, and with that, let's go ahead and push the market forward. As you can see, we're inside of our zone now. And after we touch the zone, what's the next step? Well, same criteria for entry. Right here, we're gonna be looking at the neckline of this double top. We had price push higher. We have that push down, the failure to continue pushing down. That is going to be our neckline, the lowest point of that for this double top scenario. And this, for me at least, is where I would be putting a sell stop order with a stop loss right above the swing high of this pattern. Whichever high is higher. Again, if this second high was a little bit higher, my stop loss would just go right above it. But instead, right here is where that stop loss is going to go. With that being the case, I'm going to put a 1.4 to 1 reward to risk ratio for these examples, and I can go ahead and click play now. And as you can see, after hitting play, this is a trade that did in fact come down far enough to hit our targets, and this is a trade I actually took earlier in the week. Now, let's take a look at the results you would have had if you would have traded exactly what you just learned throughout the past 30 days and throughout all of 2023. And stick around after that, because I'll be showing you two other technical factors you can add to this chart pattern to make it go from profitable to extremely profitable, to make it go from accurate to extremely accurate. But for now, let's take a look at the results you would have had if you would have traded this for the last 30 days. What you can see right now is the chart of the euro dollar. The red lines are going to be losses, and the green lines are obviously going to be wins. We had a 1.4 reward to risk ratio, just as I showed you earlier in this video, for each of these trades. And as you can see, throughout the last 30 days on the euro dollar, you would have had 3 losses and 5 wins. And what that means is that you would have made an 8% ROI. Now, I know there might be some of you out there that think 8% a month is low. It's not. 8% is a great return if you can make it consistently every single month. But also, I want you to keep in mind, this is on one currency pair. Obviously, we're not just going to be trading a single currency pair. So imagine having not just one of these, but multiple. Let's say you find 3 pairs that perform in a similar way. At that point, you would be looking at more like a 24% month. Not that you would get 24% every single month. I just want you to have an idea of what's possible when you use a trading strategy that has a positive expectancy and you battle through drawdowns, even though you have some losses, and continue trading it. These are the kind of results that you could possibly get. Now, what about throughout all of 2023? We don't want to just see the results for the last 30 days. We want to see results over a long period of time. So throughout all of 2023, these were the results. I'll go ahead and scroll back so you can see my testing. Again, red lines are losses, green lines are wins. Feel free to test this yourself, which I do recommend. This goes all the way back to the start of 2023. And throughout that time, we got 26 wins and 17 losses. So we'll bring up a calculator yet again. We have 26 wins. All of those were at a 1.4 to 1 reward to risk ratio. We had 17 losses. So we now subtract those 17 losses because they're equal to 1. And then we get 19.4, what we call R. 19.4 R means 19.4 times whatever we're risking. I personally risk 2%. You may risk more or less, but that would give a 38.8% ROI throughout 2023. And again, keep in mind, that's just trading it on one pair. If you had, let's say, 3 pairs, that were performing in a similar way and you traded them all year, that would be more than a 100% gain this year with just this strategy alone. Now I'm going to be teaching you two other technical factors that can take this already good chart pattern and turn it into a great trading strategy. So as you can see on the screen, this is actually the trade from the intro. We've had quite a pullback since the intro of this video, but I've moved my stop loss up to a 1.4 to 1 reward to risk ratio, meaning that's my worst case scenarios. I hit a 1.4 or around $4,700. Currently we're at $7,100, and I'm really hoping we can see this thing take off to the upside and continue in this uptrend. But as you can see, we have our valid double bottom trade scenario that you've learned throughout this whole video. I don't need to go over that again, but what I do want to share with you is two other technical factors that can dramatically increase the accuracy of double bottom and double top trades. The first is something I talk about all too often, and that is valuable levels of structure or major levels of structure that have been tested multiple times. So this is the way I personally like to trade these. I don't like to trade them in the middle of nowhere, but I love trading these patterns in the way you've learned in this video if price is already at a major level of structure. And my perfect trading scenario is when I can add one other technical factor to this technical factor along with the double bottom trading strategy and chart pattern you've already learned. And that other technical factor is in fact the RSI indicator. If I see the RSI go oversold, or even better, get what is called divergence, quick lesson on divergence. If price is making equal or lower lows, while in fact the RSI indicator is making higher lows, that is called RSI divergence. So if I can get the double bottom chart pattern and strategy you've learned throughout the video inside of a major level of structure with RSI divergence, that is my absolutely perfect scenario for this entire trading strategy and for any time I want to trade double bottoms and double tops. And as you can see, again, I wanted to show you a couple of live trades so that you can see that all this was not just in hindsight. I use this on a daily basis in my trading, and I have for the past 8 years. One other trade we're going to take a look at is the Euro Swiss. And this is a trade I'm still in that hasn't even hit our first targets yet. So this trade, if we look left, let's go ahead and start with the first condition, a level of structure that's been tested multiple times. So here on the Euro Swiss, we absolutely have that. We have this level where price has acted as support, support, resistance, resistance, support, support, resistance, definitely been tested multiple times. Price then, if I zoom in to make this easier to see, comes down, creates a double bottom while inside of this zone, meeting all the criteria for our double bottom. We then break above our neckline, which is where my entry was. We pushed up, almost got to a 1.4, but not quite. And my actual exit for this trade is up here close to our next level of resistance. Now stick around, because again, right after this, I'm gonna be talking you through the number one problem that's keeping you from being profitable and how to fix it. But let's discuss these two technical factors one more time. We have the full double bottom strategy you've learned throughout the entire video. But when adding these two technical factors, it dramatically increases the accuracy of these patterns. What two technical factors is that? That would be major levels of structure that have been tested multiple times, like we see here on the Euro Swiss. And what was the other one? It's going to be RSI divergence. As you see, if we look down here, we have a low on the RSI. We have an equal low on price, while the RSI is in fact heading higher, giving us RSI divergence and giving us all the confluence we need to have this as an A+ trading setup using the double bottom strategy you've learned throughout this video. Now, although you know a full, accurate trading strategy from what you've learned so far in this video, it will mean absolutely nothing if you cannot fix the mistake that hinders so many traders from becoming consistently profitable. This mistake is very simple, but is detrimental if you continue to make it throughout your trading career, and will cause you to blow your entire account and eventually completely give up on trading. What is this mistake? It is a lack of patience. Let me explain by first telling you the top 4 signs that you have a lack of patience in your own trading. Sign number 1, you are constantly taking trades that do not fit in with your trading plan because you're not patient enough to wait for the perfect trading opportunity. Side effect number 2, you're constantly switching between different strategies because you don't have the patience to allow one strategy to play out over a large enough sample size to let that edge go to work. Side effect number 3, you're risking too much money on each trade trying to get rich quick because you're not patient enough to use proper risk management. And side effect number 4, you're taking off targets early every single time. Even though you had an initial target, you're taking the target off before it gets there because you're not patient enough to let that trade play out. If you are suffering from any of those, then it's vital that you watch the rest of this video. So here's how we fix that. I've been trading for over a decade. I've suffered with my own lack of patience throughout that time. I've also been teaching traders around the world for over 6 years, so I've seen the detrimental effects a lack of patience can do to others as well. And oftentimes, traders will ask me through email, or whether it be email or FaceTime, how can I become more patient? Here's the answer to that. No one can teach you how to be patient. Patience comes down to your willingness to do what you know is right and to avoid doing what you know is wrong. Here's what I mean by that. You already know that you shouldn't be trading outside of your trading plan, but you're having a hard time sitting on your hands and not placing trades because you're too impatient to do so. That has nothing to do with something I can teach you. You already know that's the wrong decision to make. What's happening is you're not having enough willpower to actually control the decision-making process. You're letting greed and that rush of gambling take control of you, and that is going to cause you to be impatient. That feeling, if you cannot control it, will be the demise of your trading account. That's the first thing. Another thing is, I can tell you things that can inspire you to be patient, but inspiration does not last that long. Have you ever been inspired to lose weight or inspired to gain muscle and get big? If you have, then you know that that inspiration might last a week or two. What changes your body, literally, is not you watching videos on YouTube about working out, watching videos on YouTube about losing weight, thinking about working out, thinking about losing weight. It's the actions and habits that you do, that you actually do. Those are the things that will change your body. And in terms of becoming a more patient trader, it's the actions and habits you take. It's not asking your mentor how to be more patient. Asking questions isn't going to do it. It's not having the idea that you want to be more patient. It's right at the point when you're about to make a decision that you know is not the right decision. When you're about to take targets off early, it's right before you make that decision and click that button, thinking, are these the actions and habits of a patient and professional trader? If they are not, then do not do them. Obviously, switching strategies every week is not the actions of a patient and a professional trader. You know that, but you lack the willpower to act accordingly and not switch strategies. That is because of greed and fear, and those are two things that you must learn how to control. No one can teach you how to control greed and fear. It's up to you to adopt the habits of someone that has discipline, to adopt the habits of someone who is patient and who is a professional trader before you're ever going to be able to achieve that for yourself. So those are the ways around, and the best lessons and the best inspiration that I can give you on being patient. Is one, inspiration's only going to last so long. It's up to you to take the actions that you know a patient and professional trader would take. That's going to be something that you will have to control. No one else can do that for you. So keep that in mind, but here is where I'm going to hit you with the toughest love of all. If you try to do that for 6 months after watching this video, you try your best to be patient, to not switch strategies, to not risk too much each trade. You try your best to stick to a trading plan, and you just literally cannot do it. Something in you is forcing you to place trades outside of your plan, to risk more than you know you should because you want to get rich fast. If that is the case, then it's very likely that you are addicted to the rush of gambling. And trading in financial markets is going to be very, very tough for you. And it's time at that point, after you have attempted, consciously tried to become more patient for 6 months and it still does not work for you, it's at that point that I would personally suggest you take a large step back and fix that problem of being addicted to the rush of gambling before continuing to try to create a career out of trading. And I say that with love, because if you don't fix that rush, that addiction to the rush of gambling, you're never going to be a profitable trader. And I'm sorry to say, you're going to end up blowing your account or completely giving up on trading altogether after a series of terrible losses. And of course, I do not want to see you lose your hard-earned money. Sorry to end on such a dark note, but sometimes tough love is necessary if you really want to help someone. And I am in no way, shape, or form accusing any of you of being addicted to gambling. All I'm saying is that if you truly consciously attempt to fix all these mistakes for a 6-month period and you can't do so because of greed, you do need to take a step back and ensure that it's not an addiction to gambling that you have. But with that being said, I do hope you enjoyed today's video. Hope you learned something from it. If you did, click that like button for me. Comment if you made it to the end. Subscribe if you are new. Be sure to check out the TTC Forex University. We still have a little bit of space left in that course. It's essentially our version of a mentorship program here at TTC. It'll be the top link in the description, or you go to www.ttcfxuniversity.com. I wish you all the best of luck in your future trades, and I'll talk to you in the next video. See you soon.